Japan's economic policymakers drew a line at 82 yen. That's when the pain became unbearable and the country's central bank was forced to sell yen, intervening in the currency markets for the first time in 6 years. Daragh Maher, deputy head of foreign exchange strategy at Credit Agricole, says more intervention is likely. He's with us now from London to talk about the Japanese yen. Daragh, it is working so far. The yen has dropped some 3% against the dollar and the euro today. But can the Bank of Japan really beat the market? It sure hasn't been working for the Swiss National Bank and their intervention strategy.
Yeah, I mean, well, they obviously think that they can, or otherwise they wouldn't have bothered. I mean, they will have learned, I think, from the SNB. Arguably, one of the mistakes the SNB made was to continually move this line in the sand lower in terms of tolerating Swiss strength. I think what the Japanese will want to do is say, well, hold on, we're not going to be so opaque. I think, in fact, that official mentioning 82, I think they already regret that, and that's why we're seeing them intervening, progressively higher in dollar yen through the morning. They want to make it clear we can be in the market at any level, but at the end of the day, we're going to stop this yen from being too strong, at least in terms of how we view it.
So when you say a mistake, only because the market knows it can continue to test the BOJ at 82, push, and wait for them to push back.
Absolutely. I mean, you hate the idea of creating a magic number, an obvious concentric circles for the market to target, and that's pretty much what that's created. But I think that's, as I say, been dissipated a little bit by the behaviour of the MOF this morning through the BOJ. Obviously, that they've come in again at progressively higher levels in dollar yen. They're still active in the market, and so it's muddied the water a little bit, which is in a way is what you want. You don't want the market to be operating in certainties.
Daragh, is history any guide as to how aggressive the BOJ is going to be here, how much it's willing to spend? My colleague Mike Fern said last time around they spent 15 trillion yen in 3 months. Should we expect a similar level of determination here?
Well, I think the starting point it gives us is they've shown a willingness to spend a lot of money in the past. So the starting point for the market this time around is that they could well do the same again, and that gives a certain degree of credibility to the potency of the move. The issue, though, is that even that they sound like big sums of money, but I mean the foreign exchange market daily turnover is massive, and so it's really about whether the fundamentals at the end of the day, whether it will kind of support the strategy they're adopting. At the moment, that's questionable, and I think that's why some of your yen bulls will still feel pretty energized even with the MOF in the market.
Daragh, at what point do you become bearish on the yen based on macro factors?
I think really what we've got to shake off is the US double dip fear. I mean, only yesterday that seemed to be kind of happening in the very opposite direction, in that the market was increasingly worrying about a November move in the context of QE2. If we can get sufficiently good US numbers and a good run of those, then I think the market will kind of peel away from QE2. You'll see bond yields in the US rise, and that will be the most likely trigger for a fundamental driver to dollar yen upside. I suppose that's what the MOF is hoping for. They don't see it happening quickly, so intervention buys them a bit of time, and they hope the data will deliver.
All right, Daragh, great perspective.